All right, welcome back to my trading profile. Today is February 5th, 2021, and we've gone up $116 today. Now, yesterday was not a fun day, but I held. I didn't sell anything, and looks like we're heading right back up slowly, kind of zigzagging around. A little flag here flying nice and green, like to see it. So let's see what's happening today. Now, of course, go to GameStop first, since that's my largest holding right now. Going back up, a little dance over here at 54. Now, I do have a buy order actually in one share at 48 if it ever hits, right? And Robinhood actually canceled one of my sells because it was too high. I believe that was the 1500 one. So they canceled that. I can't sell that high, they said. We'll see about that, right? So what else do we have here? GameStop holding, and I'll tell you why I'm holding my GameStop just briefly. Um, as you can see on Reddit, if you're looking around, you can see that there's a lot of people trying to make people not buy GameStop. It appears that there are lots of tricks that are being pulled by these hedge funds. And they don't pull tricks just for the fun of it. They pull tricks because they want something to happen. They want the price to go down, right? There are hedge funds that want the price to go down. There's also ones that want to go down so they can buy in. So this isn't just one type of hedge fund. The other types of hedge funds actually are on the GameStop side. They're not friends of Reddit or whatever, but they plan on making money off of this as well. And so everything's going business as usual. And buying at 48 would also cut down my average cost, right? These two going down, my REIT, oh no, and uranium. But it's early morning to be expected. I bought a little bit of Litecoin, a little bit of Ethereum. Wow, look at that. I only put how much did I put into Litecoin? Not much at all. $100, and it's already got 5% interest right there. Boom. Snap of the finger. That's why I always think that crypto it's a pretty good investment. You can make 5% return in a matter of 8 hours or something. But this isn't the main show. I do want to talk about DHT. Report came out a couple days ago. And is it popular amongst institutions? So they have this little chart here. Past is good. It's good value. Nice dividends. It's healthy. It is healthy. They do have liquid cash. They don't see much future. I don't know why. Who owns DHT? Well, 55% is owned by institutions. In fact, it's mostly just 11. General public, private companies, and individual insiders. So that's the CEO and whatnot. So you can see here, these are nice charts. Basically it says that there are insiders that own the company, so they have a vested interest in it going up, right? Look at that, isn't that beautiful? They only own the boats though, so I guess this is where they go to. But the main attraction I brought you here today is a preview of this. This is my safe portfolio, happy, diversified, boomer retirement fund example. Now, of course, follow my trading practices at your own peril. You are free to copy part or all of it, but this is not financial advice. Let me repeat that. This is not financial advice. However, the things I'm saying are widely accepted practices. So I have it in 3 different categories. And of course, you could trade these companies out pretty, so instead of VIO, which is the S&P 500 ETF, you could say, no, I want to put SPY in there. Or you could just do these two. Or you can trade Coke for Pepsi. Or, whatever the case is. So here I did a little thing. This is based on yesterday's prices. So this is how much they cost. right, per share. This is their dividend return, right? And here's percent of portfolio that I would personally put in, right? So you could say that you want 100% of your portfolio to reflect this safe and diversified portfolio, right? And or you could say 50%. So 10% of 50% you put into SPHG, right? And you could switch these numbers around pretty easily. You say, now I want 8% of VU and I want 5% of V and Q, right? You know, this is just a general idea. This is about what I would do. This is what I made. Um, and you can see the dividends. All right. Now, of course, DHT and NAT are well above the average there. NLY, of course, has a really nice one, and it's a solid company. So, at least 10% I put in there. And has a nice low price point there. Oh man, it's beautiful. So ETFs, of course, buy and exchange indices are safe, reliable, slow, steady income. They should be a nice part of any healthy portfolio, right? So these are some of my favorites right here. Of course, you want to have a little bit of VOO in there, right? A little bit of VOO. Just buy the whole market while you're at it, right? This is a nice Schwab dividend. This one I actually really like a lot. This one as well. Just a couple. You could say, no, I want HGY instead of VNQ, whatever. Those are nice and fine and dandy, right? Stocks. You want to have some nice healthy boomer stocks, right? Coca-Cola, Fifth Third Bank, Truist Bank, Dominion. You want some energy. Maybe you want some banks. You want some energy. Maybe you want some consumer products. What have you. You can put Unilever or whatever you want in here, right? Microsoft. Some nice stocks. Nice boomer stocks, right? And then there's REITs, good old REITs. I like REITs. I actually really like REITs. They have nice high dividends. Look at that. Oh man, 7%, 11. Right, those are nice. REITs, they own property, obviously, and they are designed specifically for dividend investors. Right, you buy into this REIT. This REIT controls property, and they use that rent mostly to give it away in dividends. And here's, of course, the averages. The average for all of them, you'd be earning 6.8%. Of course, that is not weighted. This is just straight average. Average cost be 58.89, right? Little expensive, and of course, just to make sure that everything added up 100% of portfolio. Um, so this is certainly what anyone would want to do for their retirement account. Nice, safe, happy-go-lucky, boomer practice. This is not what we will be doing for the majority, though. I may, oh man, I like that. I may uh, diversify part of my uh, portfolio into that, certainly, because you want to have a nice cushion, right? Nice, steady growth. And then you can have some fun money to bet on GameStop or whatever, right? So that's probably advisable, especially when you're younger. Once again, not financial advice, but when you're younger, you can afford to play around on the stocks a little bit more. When you're older, you want something nice and steady because you're about to retire, so you don't want to lose it all overnight on GameStop YOLOs, right? So I would actually put about 10% or at least 5% into some cryptos. Maybe diversify a little bit, Ethereum, Litecoin, put some in Bitcoin, obviously. Um, so if I had chicken out, because post market this went down to like there, right, or even lower, right? If I had chicken out, oh no, I got paper hits. Let me sell everything at a loss. Oh, woe is me. Right? If I had pushed out of stocks, or even most of my stocks, right, and went into this boomer stuff, right, that I was talking about, Coca-Cola and whatnot, I would have lost mine because boom, right back up, and that's the way of the market, up, down, up, down, up, down, and you can never really tell. You could have something that's solid as a rock company, like Microsoft, right? or even more old school, right? Coke, Pepsi, right? These are about as boomer as they get, right? And well, look at them, right? Let's see, 1 year. Look at this ups and downs. Okay, 59 went down to 38. Holy cow, that was on sale. Um, you know, if that's a bit of a difference. That's a bit of a difference. -9%. Oh, no, -15.9% for the year. All right. And of course, it's on sale. Everybody's like, buy it. I mean, I don't know. Yeah, I was about to say, I don't think anyone's going to say sell Coca-Cola. It's going under. And it has a decent dividend for a boomer stock for something as steady as Coca-Cola. 3.36 isn't that bad. A lot of companies have no dividend when they're that established. So that is just a brief overview. Of course, we'll look at my entire portfolio again. I haven't done anything recently, but just a quick look down. I don't own that many stocks right now. I'm consolidating. I do plan on transferring over to probably Charles Schwab instead of Vanguard. Vanguard has too long of a waiting period before you can use the money. Um, I just like Robinhood's, instant cash deposit stuff. That's really wonderful. Schwab is kind of in between. It takes a while to put it in there, but not as long as Vanguard. And it's a little bit easier to use. Although Vanguard has come out with their new app, their Beacon app, which is a little bit more user friendly. Charles Schwab is no Robinhood in user friendliness, but it is better than Vanguard or something. So we got some green arrows, like those. GameStop is going back up. The boys are back in town. Look at that. Some fools sold yesterday when it went down to like how what was its lowest? Some fools sold 81. Yeah, no. Yesterday when it went down to like 53. Oh, I gotta get out. They paper handed. If they had just waited one more day, they could at least got out at 63. Right? They could at least got out at 64. Right? They just wait for the morning. Right? No, no, no. Ship's sinking. Jump off. Right? And will there be a rally? Will there be the saving grace of GameStop? Will GameStop really have that short squeeze? And will you see a lot of posts from bears saying, oh, you guys are stupid for holding. Oh, you guys are dumb. You should get out while you still can. You guys are dumb. Of course, you got these guys who are like, double down, baby. We're riding this ship to the ground or to the moon, right? It's either welfare stamps or yacht. There is no in between, right? If GameStop really does have a miraculous recovery or that squeeze, there's going to be so much I told you so's and in your faces. All the bears are just going to look like fools. But it is a gamble. Don't bet more than you can afford to lose on any stocks. If you're going slow and steady, follow that boomer plan or something like that, right? This is my plan. I'm YOLOing, a large percent of my stocks on GameStop, right? And once I get out of the GameStop game, depending how much I make or lose, um, yes, I'm still a little ways away from my average cost, right? Depending on that, depends on exactly what, but I do plan on following at least some of this boomer strategy. So that's about it for the day. Remember on the 12th, I think they keep changing this date. DHT is coming earnings on the 12th, pre-market. So that's when the oil hits the frying pan. All right, so see ya.